How's it going? Happy September 14th, Wednesday. Another crazy day in Tesla. But I got the wonderful Madame Alexandra Merz here with me, aka Tesla Boomer Mama. If you
Thank
don't
you.
recognize her by her actual name, maybe you do now. You've seen her around on your favorite YouTube channels, on Twitter, procrastinating, talking about S&P, Moody's, all the stuff that,
Mm.
let's face it, a lot of us really care about, but it's just too bland and boring. We don't have the expertise to dive deep into. So I'm super honored and excited to be joined by you today, Alexandra. How are you?
Just fine. Thank you. Yash, thank you for having me. And thank you again that when you went on my little channel because you were one of the first ones and we still have some views on that. It's really cute.
Yeah. Yeah, that was a really fun time. I see a lot of people in the
Yeah.
chat here, by the way. Let me know where you guys are tuning in from, city, state, country. I see Farzad said he's out of blueberries already. You tweeted, by the way, like a quick aside, you tweeted yesterday with the grape emoji. So it feels like it's like kind of like a Tesla fruit gang happening here.
Yeah, exactly. We'll make a whole mixed fruit salad now. That's for sure. I actually like
Um,
raisins. I never liked raisins in Europe, but here in California, they're really good. And we found some that are absolutely spectacular. And it's raisin season. So that's it. You got the raisin now.
Love it. I was just telling her I'm not a fan of raisins, but I can be convinced otherwise. We'll
Do you
just
like wine?
it's okay. I'm not a huge fan.
It's okay. Okay,
Yeah,
well,
yeah.
I
That's
love
probably
wine,
why.
so
Yeah.
that's probably why I like the raisins. So there
Awesome.
you go.
But
Let's get
before
into
we
it.
get into it, I think I'd be remiss if I didn't touch on the stock price today and where we're sitting at
Please.
currently. Tesla up 2.8%, up $8 at $300.36 as we sit here right now. Thoughts on today's move before we get into some of the details around everything?
Well, I mean, I was happily surprised because I bought stock yesterday, but I wasn't quick enough to buy yesterday my short options. I had started building a position. I mean, you won't call that short because you're much shorter than me, but I started building a position in January calls just
Hmm.
because I thought, between Q3 and Q4 results, January will be a good uh, period to have calls. So those I bought yesterday. I started with one yesterday and six more today. I mean, I'm a really small option player, but I did obviously appreciate the move up last night, and I'm pleased we're holding over 300 now.
Yeah, it's kind of surprising. I mean, like yesterday, the Nasdaq was down like five and a
Mm,
half percent on the day, and Tesla was down like three upper threes, 4%. Let's call it. Today, the Nasdaq's up, barely. Like it's pretty much flat on the day, only up 15 basis points, and Tesla again up almost three
yeah,
percent on the day. So
well
the
outperforming. Yeah,
yeah,
yeah.
like very much so. And this kind of actually is a pretty good transition into what
Mm,
we really want to talk about, which is like capital inflow into Tesla and investment grade credit rating, why it matters, because
yeah,
Tesla really doesn't need credit. It really doesn't need to borrow any more money. Free cash
sure.
flow is sufficient. So
Yeah.
just for people that may not be aware, what is investment grade? Why does it matter? And what do you think in terms of some sort of effect it could have on Tesla stock?
Okay, I'll try to keep it short because I've done it so many times, and I don't want to bore those that know it already. But so ratings have been around for more than 100 years, had their period of glory, and are still by the SEC obliged for certain types of funds, right? They tried to get rid of it since 2010, when after the crisis, Congress asked the SEC to stop all that. But 12 years later, we're still not finished with cleaning that mess up. So there are still funds that cannot invest today in Tesla stock because Tesla is not investment grade. Now, what is investment grade? It's actually a prediction by the 2, 3, 4 large rating agencies, but the two big ones are Moody's and S&P, on whether senior debt bonds will be reimbursed at a certain moment in time. So when you issue a bond, they give the bond that rating on senior
Mhm.
debt, and that is their prediction, their probability of the bond paying its coupons and then paying the final reimbursement at the end. So it's quite basic, and it's stupid that this is actually applied to stock, but it is. There's just
Mhm.
nothing we can do about the stupidness of the situation.
Yeah.
So the ratings go from AAA to D. It's a letter combination. They have similar letter combinations both. There's story behind it, but useless to go into that now. And
Mhm.
the first 5 grades, AAA, first 4 grades, AAA, AA, single A, and triple B are investment grade. And then there is a hard line There's a hard line exactly there between triple B minus, there's always a plus and minus in each category, to double B, where it becomes speculative grade or non-investment grade or junk. Let's just call it what it is. So Tesla is currently stuck at that BA1 from Moody's or BB plus from S&P, just below that red line. Fitch doesn't rate Tesla senior debt. And by jumping that red line, it would become immediately investment grade, even though it may be only triple B minus, right? And so this is this is a game, right? I mean, it's a game that pays these two rating agencies a lot of money. I always insist of everybody understanding this is just not some nerd sitting in a corner. Moody's has about $6 billion of annual revenues, and they have a profit margin of 30%, which is unheard of, right? But I mean, why would they not? Because all they have to produce is hot air in which they put 3 letters, right? That's all there is. And S&P is much bigger. Sorry about that. It's about 10 billion per year. Same sort of profit margins. So they are influential. And for those that have no idea about credit ratings, the closest industry they're on to is actually journalism, because it's all about how they give out press releases, timing, how it's worded, and how it's packaged into these 3-letter combinations. So the game has been going on now for a couple of quarters. The last action from S&P was last year in October, when they upgraded them from a lower double B to a double B plus with positive outlook. So since then, we're in the thin air between junk and investment grade, and we've been waiting. Now add to that, let's just concentrate on S&P for the moment. Add to that S&P also does different other things, like the indices, where you remember what a clown show it was to finally get inserted in the S&P 500, again, at least 2 quarters too late. But I mean, everybody was happy it finally happened. End of November announcement 2020 to insert in December, 3 weeks later. And then the second big bolt of ridiculous behavior by S&P is on their ESG 500 S&P ESG 500 index, where they ejected just last May Tesla in the most dubious way of that index. So Tesla in all 3 main product lines of S&P, the index itself, and now the rating, they're always late. It's never favorable. And you're right, Tesla doesn't need that, but the fact that they don't need that doesn't give them any incentive to be even a slightly little bit more accommodating.
Right. And just to clarify, by the way, this tweet that I have up is from last October 22nd, 2021. And that's what you're referring to with the last upgrade and note from S&P.
Yes.
So S&P really leads the way, right? It's S&P, then followed by Moody, and then Fitch is kind of just a nothing burger.
Well, Fitch doesn't have at all a senior debt opinion on it, so there's no analyst assigned to it. And the analyst from Moody's, René Lipsch, he seems like the typical follower, because after this happened in October 21, in January 22, Moody's did the same move 3 months later. And so that actually brings me to my hypothesis. I think S&P will upgrade. And I think they will upgrade after the Q3 financials, which I believe are in the last week of October, but I may be wrong. It may be a week earlier. So between the 20th and 30th of October, I expect S&P to upgrade, and then Moody's will follow maybe the same day if they're awake, but probably in the 3 months that follow. But nobody will really look at Moody's anymore, because they are really considered. The analyst for S&P is Nishit. He is really the better one. I mean, I can't say they're good. That will be, that's too much. But he's clearly the better one, the more instructed one among the two. Their arguments for not upgrading are getting really very thin, while the Moody's analyst remembered the stupid arguments he brought up and where I responded. But S&P seems ready to upgrade, yes.
Right. And really, that's all that matters, to be honest, right?
Exactly. Once S&P is upgraded, nobody will ever talk about credit. I will not bore anybody with talk about credit ratings anymore, I promise.
No.
Once it's done, it's done.
Like, definitely don't feel bad. It's the reason why I find it very interesting from a stock perspective, let's say, is because that weekend is when that October 21st, I think, was a Friday. So, obviously Saturday, Sunday, that weekend was filled with a credit rating upgrade, a Goldman Sachs upgrade as well, and that Tom Brady Hurts news, if everyone can remember that weekend, right? And so what's interesting is that following that weekend, the Monday, and then or actually Friday was the 22nd. So it seems like just one day off here. But look at what
Mhm.
happened the following, let's say,
Is
10
this
trading
last
days.
year what you have here on the
Yes,
screen?
sorry, yeah. Let me just highlight. So this is
Okay.
October 22nd, 2021 on my screen where my
Okay.
cursor is. And you can see, and I'll actually draw a trend line just to make it easier. From October 22nd, from essentially the credit rating upgrade, and again, correlation doesn't equal causation, but this is what we're trying to
Mm.
decouple here, into the next 9 trading days or 13 actual days after, Tesla rose up 38.5%. Now, you
Yeah.
could point to a million things going on during then. To be
Sure.
honest, I don't remember much outside of the Goldman Sachs upgrade, Tom Brady and Hertz deal happening, and then the upgrade, and then the credit upgrade, obviously, that we just showed in terms of the tweet. So the
I
reason
mean,
why I point
that's
this
quite
out,
a move in 2 weeks, right?
it's
Crazy.
quite the move. And I mean, do we remember, like, this was pretty unexpected, this move? Like, I remember me
Mm.
going live all the time, us being like, well, like, Hertz can't be moving this up, and people making arguments on CNBC saying, look, it was a Hertz deal, and the market now knows that Tesla has like so much unmet demand. It's like, no, that story always existed. So to me, it always smelt a little bit fishy that Tesla was up
Okay.
40% on the Hertz thing. I always pointed back towards maybe the Goldman Sachs upgrade, maybe the credit upgrade. And so
Well, I
obviously
mean,
we can't.
yeah, you're right. A couple of things happened at the same time. Do you know the credit upgrade happened
Mhm.
immediately after the financials? So we had the Q3 financials, I think, on the
Okay,
20th, if I recall right.
right here, yeah,
And surprisingly enough, even though they were very good, you remember,
yeah,
not much happened immediately to the stock. I
yeah,
mean, obviously it was after market, so the next morning it opened slightly positive, but it wasn't as if this was the jump of the century, right? We could have expected it, but that's
yeah,
not what happened. So then happened the credit upgrade, which I think helped gain some dynamic.
right,
I do believe the Hertz thing was actually overplayed. I mean, if you think about it, 100,000 cars to Tesla. I don't want to get complacent, but that's not much anymore. I mean, it's a big
yeah,
contract, I understand, and we were obviously getting into a topic of that fleets would suddenly be built up. But I mean, who thought that fleets would not get built up?
yeah,
Retrospectively,
yeah,
a year ago, that was it really that important? Probably not. These 100,000 cars would have been sold anyway at the same price because Hertz, if I remember right, never had any
yeah.
package deal, no
No,
reduction, no whatsoever. So I mean, it's nice, and it's nice that we can find Hertz is now at the Tesla's now at the Hertz dealerships when we go to airports and whatever. They're actually not making it easy. I talked to Sawyer the other day, who told me that he wanted to take one in Los Angeles when he arrived in California and drop it off his Tesla in Santa Barbara airport. And no, they do that for any other cars, but their Teslas have to be brought back to destination. I mean, there we go. But anyway, it's a good thing. So to say all that, yes, I think the credit upgrade, although it was still from second highest junk rating to now highest junk rating,
right,
did have a positive stimulus, but this will have nothing to do with what's going to happen once we get investment grade. Investment
right.
grade will really be an event. I mean, I know this sounds crazy because this is just 3 letters and it's ridiculous, and these people are so lagging and so backwards in their whole analysis, but it will have an impact for 2 reasons. Because
Hmm.
market makers know very well it may take 6 to 12 months for all these institutionals that need still to obey to investment grade to really adjust to their analysis and buy, but they will buy and hold. This will be long-term holders, passive
Mhm.
holders, not at all the motivated guys that want to have social justice or whatever. So this
Right.
is the best type of institutional investors you can get, and so the demand will be there, and they want to forerun that to be able to sell it to them at higher prices, and that's why I do believe it will have an immediate impact on the price.
Yeah, and if and again, it's so tough because you don't want to say, oh, look, 40% increase directly attributable to that, but it
Mm,
probably played a key part in that run up following the
sure.
next 2 trading weeks, right? Because what
Yeah.
happens, like you're saying, is now all of a sudden, if you're a portfolio manager with an internal guideline to not invest in
Mm,
stocks that aren't investment grade or at this bar of credit rating, which is, I mean, silly in and of itself if you think about it. But let's say if you just have that as an internal metric to follow with your fund,
yeah.
then all of a sudden now you're unlocked to, and if you're underweight something that you really believe in that you couldn't otherwise invest in because of this seemingly minute detail, right? Credit rating,
Mm,
because Tesla doesn't need to borrow any money. at the
Exactly.
moment. And so it seems like there would be an effect here. I guess no one can really say what effect it might have in terms of percentage. It's hard to say. But I know that you
Hmm.
follow some of the ETFs and the funds, and
Yeah.
you think you said like 90% of these funds aren't invested in
Still
Tesla
have
currently.
nothing. Exactly. And I
And,
mean, obviously,
yeah.
some of them could do it now, but they still follow those rules. I mean, there could be an even bigger catalyst if Elon, which I doubt, but if Elon wants to game them really bad. And that would be, rather than now make them wait, or even make them wait and they come up with their lowest grade investment, right? Then go to them and say, look, I want to do a bond issuance. I want
Okay.
to actually have debt. Please
Right.
rate us prior to that issuance. You will see how then suddenly it goes from maybe double B, maybe triple B to triple A, because that's what
Right.
it's worth, right? I mean,
Yeah.
that's the moment they get paid, the whole narrative changes. If it gets to double A or triple A, then the whole story would change. And if then he would do what I hope he would do, meaning do the stock buyback with that money, how Apple did in 2013 going
Yeah.
forward, and still does, that will obviously pull the rug under their feet, because then you
Yeah.
have less float outstanding, you have a triple A, then you have the blue chip tick box done, so
Right.
lots of other people will then jump on the stock, and that would have an even bigger impact.
That would be kind of epic, right? If
Oh
they
yeah, that
follow
would be
that.
Christmas and Easter at the same time.
I mean, it's funny because
It
everyone
would
argues
be.
about buybacks and like should Tesla do buybacks and stuff like this. I mean, Tesla is sitting on Tesla just from their free cash flow can reinvest into gigas and have more left
Oh,
over. So,
yeah,
and their balance sheet is already padded, war chest acquired, right? At this point,
exactly.
18 billion.
I
So,
mean, what I
yeah,
just suggest is really financial arbitraging. It has absolutely nothing to do
right.
with having more cash or whatever. Even they have too much cash anyway. They could do more buybacks by other means. This is just gaming them by their own game.
Right. That would be kind of epic. Um,
Mm.
I guess I'll look out for Elon hints again on Twitter, maybe to,
Yeah, maybe.
maybe he's, do you know
Oh,
what
I have to
this?
show you. I have to
Oh,
show
yeah.
you. Sorry, I don't know whether you've seen that, and I don't know whether it shows. So,
Oh,
so
yeah.
this
There we
one of
go.
my followers sent me the cup with the
That's
Moody's
awesome.
is
Oh, I don't.
irrelevant. Yeah, I love it.
Abby did the same thing for me too with the Elon reply as well. I think that's awesome. Is that
Yeah,
was that the reply that you had to day so and so of you
exactly.
yelling at Moody's?
Oh, no, this one was the day we had a reply from the Moody's guy, and
Oh,
we,
the email.
telling us there were not the email reply, and him telling us that, oh, if only there would be more models, and then
Yeah.
Dave Lee actually picked that email up and wrote how ridiculous it is, and tagged me into that, and that's where Elon replied, Moody's is irrelevant, which we done nicely, because you have to know I have a couple of people really helping me. I mean, I'm good, but the people helping me are even much better. So we're making a great team. So in our open letter response to Moody's, we inserted that tweet, which I'm sure they were absolutely delighted about.
For anyone that doesn't know, Alexandra has been sending them emails asking for explanations, and so they replied. This one was Moody's, and they said,
Yeah,
"Well, Tesla is great quantitatively speaking, but
exactly.
qualitatively speaking, we'd like them to have more models. If you look at Ford and GM, like these guys have like so many more models coming out." So
Yeah.
it was kind of a funny letter that that kind of went viral in the Tesla community, because it was like, do you really want to be that restaurant that has 600 things on their menu and they haven't made half of
Exactly.
them in like 6 months and the chefs don't even know how to make them anymore? Or do you want to be that like fine dining place that has 7 things on its menu, opens for like 3 hours a day
But
and it's
all
getting sold out?
perfect. Exactly.
Right. So
Exactly.
that's kind of the
And,
dichotomy,
and
I
then
guess.
the other analogy was compare it to Apple. How many iPhones are
Yeah.
there? Not a
Yeah.
lot, right? How many other products Apple has? Not a lot. I mean, the whole product matrix is so much closer to Apple than to a car maker, because, well, Tesla is so much closer to Apple than to any car maker, and that just means that they understood nothing, just absolutely nothing.
Yeah. Absolutely. Well, let's talk about. I know we wanted to chat a little bit about ESG ratings and Tesla being kicked
Oh
out of
yeah.
the S&P ESG fund. I guess if you could highlight a little bit, what is ESG? Why do we care about it if we do? And where do you kind of see this going?
So this is a much deeper worry of me. Really, if I would have to say what really worries me about financial markets, it's ESG. Credit ratings has to be straightened out, and I love to have, been the workhorse pulling that car out of where the mess it was in. But ESG rating is actually worrying me, because ESG exists since the beginning of the 2000s. Some clever person, who I still would like to congratulate of being how idiotic he was, put these three subjects together. So this is environment, social, and governance, right? So you have three subjects which, I mean, they are all on the, I don't want to say woke agenda, because I really try to stay out of politics with this topic, because it should be, this shouldn't be partisan left or right. This is really a worry for me deep down for corporations and the economy, and for shareholders' value in a company. I think what is happening at the moment is that stakeholders and media are trying to take over and we saw it actually with these stupid rating agencies, in telling corporations how they should run their businesses. And that's just not in our interest. We are shareholders. We understand that Elon and his team do very well what they do. And I don't want any outside force, just because they feel they are the good people of this world, influence corporations and good management just by giving new rules, right? By making up new rules that correspond to their agenda, but doesn't correspond to the shareholders' agenda. So my big worry with ESG is that it has taken a life on its own. Mid of the 2000s, it started to exist. Nobody really cared. Some social warriors loved it. It became this commingled thing. And then in Europe, actually, which is funny, usually all this sorry, I didn't mean to say crap, but I did. All this, all this stuff comes out of America, but this time it actually came out of Europe. So the Europeans in the mid of the 2015-16 started to set up Paris Accord and lots of good initiatives into that. In America, it started with Bloomberg. Bloomberg also saw very quickly an interest in getting into this field. You had MSCI getting into it. Then the rating agency started getting into it. The CFAs love it, because ESG actually is about preparing data to prove that you are good. Right now, the whole thing is, what is good?
Right.
Well, who defines what is good? What is good environmentally? What is good socially? What is good governance? And then it all has to be commingled into this one pot. And it becomes very politically driven, which I don't like. I don't like when politics, I don't like when Biden plays with GM and the unions. I just don't like all this interference.
Yeah. Right.
And so fast forward to last year, November, when President Biden was at the COP26, so 20 other nations, and they signed an agreement to mission a foundation called IFRS to look into standardizing these ESG data collections. And this is, it sounds like something completely bureaucratic and non-important, but I cannot stress to what point this is important. So 26 governments of the world have agreed that IFRS creates some way of collecting the data from all companies worldwide that are stock exchange listed, right? This will have a huge impact, because in every financial reporting, these numbers will have to be there. So they will determine on what every company has to release quarterly and annually on their workforce, how many minorities in the workforce, do they have handbooks for this and that, and how are they environmentally responsible. Now, it all sounds initially very good until you know that this foundation that is in place of putting this in place worldwide is actually sponsored by CFAs, so all the Ernst & Youngs and PwCs of this world, and OEMs and petrol companies. So we suddenly have people paying into this foundation yearly. Every year they put huge amounts in there, so that they are the ones defining how this data collection is going to be, meaning which questions are going to be asked to all these corporations and how do we have to be prepared and whatever. So first thing is, this is an enormous gravy train, because all these CFAs will be paid even more to prepare even more data, right? So these corporations we invest in, including Tesla, but I'm also talking about many more, have to now suddenly address this ESG topic with lots of workforces, lots of documents, and then just be aware these numbers they will have to publish, these are SEC numbers. So look at what happened with Twitter saying it's only 5% bots. We all know it's not 5% bot. You actually are criminally liable. The board is criminally liable if these numbers are not correct. So the thing is, who decides what type of data this is, how these questions are going to be asked, is highly dubious. Everybody looks at ESG as if it's just something beautiful and good, and it's actually become something rotten before it's even fully in place. And I'm absolutely worried about it. And we can get to the ESG rating because that's the next consequence. But ESG itself has really become a very dangerous topic.
I mean, on the surface, right, we all agree, like, we should have a metric objectively that we could figure out by how much good does a company do versus other companies. The problem is, like you said, is the definition of that, and the rigging and the gaming of trying to set incentives in a way that can pick and choose winners. And let's be honest, sometimes, like what we saw with the ESG push in like Sri Lanka and getting rid of all the fertilizer there, like it's trying to do good, but it does harm. And so and we can talk about motivations and monies and all that sort of stuff. But that was a great answer, great explanation. So where do you see this going with the rating side of it?
Good thing. So the two rating agencies understood 3-4 years ago, this is a huge gravy train. Let's jump on it, right? And ESG, and S&P, like always, was much more ahead of the curve than Moody's, but Moody's then followed. So they bought some of these boutiques that had popped up in Germany, in Switzerland, but also here in the United States, that did data preparation, that had sort of a methodology how to weigh certain criteria on their scoreboard and whatever. So S&P bought the most valuable one, which was a Swiss one, and straight away declared they are now going to be their rating. And they combined it by saying, we're going to take the S&P 500 as it exists, which is just the market caps of the 500 largest companies. Take aside all their shenanigans, how to put somebody in and out, right? We know about that. But let's just take the S&P 500, give to all these 500 companies a score. And then if they remain in the field, then we keep them in there. And if not, we replace them with 501, 502, 503, right? And so what was the criteria of staying in? You had to be within your subset of companies, so Tesla would have been in the automobile company, be in the top 75% of the results. If you were in the lower 25% of the results in the automobile cluster, you would be thrown out. So they did their scoring model by sending endless questionnaires to all these 500 companies, and actually more companies, but to these 500, 10% answered. Obviously, you can imagine that Tesla did not. And then they analyzed from publicly available data all the crap. They did that for the automobile sector and all other sectors. And the winner in the automobile sector was GM. Are we surprised? No. So then at that very moment, Tesla was still within the top 25%. They were not out yet. They were not in that lower 25% bucket. So they were a bit annoyed because obviously the whole goal of this scoring model was to find a good reason to throw Tesla out, but the scoring model didn't by itself throw them out. So that's where they did what I tried to allude to earlier. They did their stakeholder and media analysis, meaning then they looked at Tesla and said, okay, well, fair enough, it's still in the group and should be qualifying, but since the press about Tesla is so bad, we disqualify, we give them an overlay, we give them an extra bad points, right? And then now they're below the 25% threshold, so now they have to be thrown out. I mean, the whole thing is completely constructed, ridiculous, subjective, and there's nothing to it. But it had obviously the effect that they could suddenly in May come out and say, oh, here is now our new ESG 500 index, and oh, number 5, Tesla is not in it anymore because they're so rotten. Which was the goal from the start, because on top of it, it wasn't even the annual birthday of them publishing. That would have been in October, and I'm actually looking forward to see whether this October they pick it up again, right? Because the annual thing of this ESG rating 500 index should be every year in October, but suddenly in May, 4 weeks after the Twitter purchase started, they came up with this wonderful reasoning.
Yeah, of course. And do you see that being much of an effect, capital unlocking or capital locking wise?
It had the effect that day. I think it was 2 million shares, because there are not many funds are yet indexed on the S&P 500 ESG, but it had an effect to about 200 million shares that needed to be sold from those funds at that date. So it wasn't enormous yet. And the good thing is the market understood very, very quickly that this was shenanigans and shouldn't have happened. And they have been really negative on S&P 500 ESG ratings since. They were not nominated for the ESG rating award, which they usually would have gotten. They were just ejected from the whole contest. So I do believe it was a mistake that was quickly understood by the market, and they will have to pay for a while being in quarantine on all the subjects. But it's still not solved. If you go today on Yahoo Finance, type in Tesla, you will see the menu board. The very right is sustainability. You have I think it's from another rating agency called Sustainability something. You have a quite bad Tesla ESG score. So yes, they're a bit higher, and on the right, sustainability. Yeah, exactly. Yep. Go there, and there you see it's a 29 score, which nobody has a clue what it is, but you see that blue dot on the bottom, in being in the bad part, because
still higher than pure average.
Exactly, but it's still very bad, right? And that's the problem with ESG. Nobody really understands what it's about. I mean, I'm digging into it and I go crazy. But they all have Tesla quite badly, because they have the way they look at it, and again, how they are influenced by that dubious foundation of how they should look at it, right? Again, I get back to Bloomberg, but there are a couple of other weird actors in that whole story. The whole anti-Elon, anti-Tesla mafia is out there, and this is where they are, and we have to fight this. We have to fight this not only for Tesla, but just because this becomes the next credit rating issue, and credit rating have been around for much too long and in use much too much and steer money from good causes to bad. This is the next one.
And I want to get into the why it matters here with you. Like, there's a lot here, and like we talk about pension funds, we could talk about a lot of this stuff. Before I do, I'm going to try something new if you're open to it. I'm going to throw in an invitation through to the Juju gang in the Discord chat, our private chat, if someone wants to hop in and ask you a question live on video, if you're open to it.
Sure, go ahead.
Okay. I'll throw it in. I'm not sure if we'll get any bites, but I threw it in the Discord. I'm not sure how many we can get to,
sure.
Maybe a couple. And I wanted to do that because apparently we might actually hit 20,000 subscribers today. So we're 13 away.
Oh, I want to be live there. That'd be great.
So 13 away. Do your job. It's a live feed.
Exactly. Go on Twitter. Tell them to subscribe. Get out there. Tell them Alexandra sent you.
Okay. So I want to ask you the why. So we talk about all these like super key metrics on Tesla, ESG, credit rating. Now, let's talk about the why it matters, because we know it's unfair at times. We know that there's subjectiveness that happens against Elon and Tesla and has been for a long time. Why does it matter for the average investor? Does it matter for the average investor or the average pension funder when it comes to these sort of things, and why?
So, in terms of quantitative measures, there's much better than credit ratings. I always refer to Altman Z, other than when it is bank related, and that's a little bit my limitation also for the GMs and Fords of this world, because they have such a large lending part. We all know they're actually making money much more on their financing side than they're making on their cars, right? On their cars, they have 4 to 6% operating margins, and on their financing side, they have 30 to 40% operating margins. So Altman Z, if somebody is just wants to reason from past, please, for the world, don't look to credit ratings. Look at Altman Z, which has been developed now for 60 years, has proven really well. If it has an Altman Z over 3, you can be comfortable. If it has one between 1.1 and 3, look at it in detail. If it's below 1.1, don't look at it. Some people have that cutoff point at 1.8 for the manufacturing. Why did I use 1.1? Because I gave those OEMs the slack of being financing as well. So I wanted to be a little bit generous with them by giving them a gray zone from 1.1 to 3. So again, if you want to do quantitative analysis on, how risky it is, will my company that I'm investing in go bankrupt, look at Altman Z and you will be quite comfortable. Why did these ratings persist? Is because they pretend, well, we're putting a qualitative overlay. We're not only looking at the past, we are also talking to management, we're looking at other factors, and that gives us more insight. Now, if you really believe that there is anybody out there in rating agencies understanding Tesla's future better than us, meaning the Twitter community, the YouTube community, who does nothing else. I mean, I don't know what you do at night, but I fall asleep with the YouTube videos and I wake up with
Yeah.
YouTube videos, and any
Right.
polls I have, I go in on Twitter. I don't think anybody else than our community knows Tesla as much. And so do that sort of research. Don't listen to old style lagging rating analysts who may think in the good old times they knew better than us. But today's world is so much quicker and so much more information dense that it is not the rating agencies anymore that can give them things. Now, the question is, can we change the foundations? Can we change the pension funds? Can we change, financial advisors that still use that when they manage the funds of their clients? And that's what we're trying to do. So we've written to Yahoo saying, Yahoo Finance, please carry the Altman Z-score. I'm trying the same now with CNBC. I was going to say CNBS. Thank you, Stephen Mockran. He's turned that word in my head
I do the
forever.
same thing. Yeah, I've done the same thing.
but it is, it's going to be taking some time until we educate people. Don't look at credit ratings, look at Altman Z. And if you're into financial institutions, there are a couple of alternatives out there. I can get into that if somebody's interested, but it is certainly a much better score, giving you a much better indicator about the health of a company than any of these credit ratings do.
Yeah, Tesla's a 16 or something like that on the score, right?
20.07, the highest ever. Never seen anything like it.
Yeah, I mean, with the highest ever across all industries.
Well, the highest ever I've seen. I mean, I've looked now for a year into all mega caps, up to the 30 largest mega caps, and all OEMs, and have never come anything even close to it.
And when we talk about all these funds and how it affects the average pension funder, I've read conversations that you've had with people on Twitter about this and how it affects the average Joe that doesn't care about Tesla per se, but does care about the returns that they have in the funds that they're in.
And they're missing out.
Yeah. Can you talk a little bit about that?
Sure. And I mean, that's exactly it. If these pension funds would have not had to look at that, they may have jumped into the water a while ago. I mean, yes, you can tell us 2022 wasn't the best year. I mean, it's getting better now, but there will be also ups and downs within Tesla. But especially pension funds usually invest over a 30 to 40 year period, right? Because that's what happens. People subscribe and then they stay in it until they get into their retirement. Tesla is the ideal generational stock for that. Ideal. And they will finally get into it, but they will get into it at, I don't know, 400 or 500. So all these pensioners that are in there will have their Tesla stock, but at a much higher, Oh, we're going there. How many more missing?
Actually, let me pull it up. I don't even know. But finish your thought while I do that.
Yeah, no problem. So the problem is that, well, they're missing out, and they will eventually get there, but they will get there at a much too high level, and it's just unfair. I really feel for these people that have their money tied up. They can't do anything. So many people in America, I don't know how it is in Canada, but so many people in America have one pension fund they have to pay into, the teachers or their state employees or of their company or whatever, and they don't have much choice. Maybe they have, very safe. I mean, very safe. The way old time definition was for very safe, and up to a certain stock allocation. But then they have no saying in the type of stocks or whatever is invested, and they will have missed out for a very long time. And finally, buy Tesla at a high price. Will it be a high price over a 30-year period? Of course not. But it's a shame that it comes so late.
Yeah, so the average person that kind of looks at this and goes, "Well, why does it matter to me? I don't care about Tesla." Well, I think it's not like, remove Tesla from this equation and just put an XYZ company and say, putting everything aside around Tesla and the politics and everything like that, why should your return suffer because of qualitative metrics that don't seem to matter?
Exactly.
And I guess the issue is it's almost like the financial institutions are the ones that even give them the power to begin with in the first place. Because if no one really cares, like the Altman scores are really all that you need. Like no one really should really care about the credit ratings that much anyways. I mean, maybe bond issuers do, but at the same time, like, talk about Tesla. Tesla's not going to need to borrow any money anytime soon.
And then very good leading up to the following question. GM's stockholder are 83% institutionals.
Okay.
83%. And GM is at the lower level of investment grade. Now imagine one moment, if they continue following these stupid rules that they can only do investment grade,
Right.
can you imagine one moment that when GM gets downgraded, which will
Right.
come? I mean, we all know it will come. Then all this institutional money, I mean, we say institutional money, it's your pension money, will have to exit GM at probably the worst possible moment because the stock will have crashed then, right? So it just, investment grade unfortunately still matters. I wish I could just snap my finger and it wouldn't anymore, but it does, and in both senses, up and down.
Yeah. And that's really what I want to highlight more than just Tesla, because Tesla is just an example today. The question is, what will be an example 5 years from now, 10 years from now? That's really what the average person should care about from this. It's not just a Tesla story. Maybe it is
No,
to a degree, but
to us, sure.
the process, the being like, Tesla is really not padding these guys' pockets at all, right? That's kind of the real
No.
issue here. And
Yeah.
that's why they're not getting any favoritism around any of this.
Yeah. I mean, anybody could have looked at this rating the last 12 months, but do you think they pick up the file knowing that they don't get paid for the rating? Of course not. I just saw somebody say, what was it, about being surprised that GM pays now a dividend. Now, GM hasn't paid a dividend for the last, I think, 8 or 9 or 10 years. So for a long, long time, I think they're actually very clever trying to pay a dividend now, keeping their institutional investors happy and warm where they are, thinking, okay, on top of it, we're getting a dividend now. Let's fall asleep again, because that's what's happening.
Yeah, I mean, it's scary, right? Where GM is,
Oh.
where they have to basically cut off their arm to feed investors at this point. Like, that's kind of what's happening,
Exactly.
right?
Exactly.
So
I actually would prefer they wouldn't even get there, because this is just,
yeah,
and it's our money. You do understand this is our money. This is the money that's going to lack.
pension
At the
funds,
moment,
right?
they will scream to Washington again to come and rescue them. So this is our
Right.
money going back into
Yeah.
their pockets.
$300.04 sitting on Tesla. By the way, if anyone cares,
6.
we're 6 people away. So
Do it while I'm on.
we'll have a party while you're on here. $300.16. Tesla has had quite the week, outperforming the market. I'll try to zoom out to the hourly candle and get rid of all the indicators for a hot second. I don't know about you, but I'd be happy with closing over $300 to end the week this week. Just setting kind of baby steps in place for finding some sort of base again here. What are your thoughts on kind of the price action?
I mean, I'm by far not technical like you are. I love watching your graphs and lines all the time. Yeah, I mean, obviously, it would be great if we maintain this trend of outperforming the NASDAQ and other competitors. And I think we're just doing that. And we're also decreasing the beta. I really wish Gary at one point will tell us all that it's not 1.6 anymore, because it's not. But we will get there. I mean, I am very bullish. I've made public that I think we'll have 385,000 this morning. Troy, to his Patreons, was a little bit less positive than he's been before, so maybe I'm way out there, but I just see so many Tesla delivers here in California. I look at what Shanghai is doing. If they really get to 100,000, I do believe lots of things are positive. The market seems to expect 357,000. I'm absolutely certain we're going to beat that.
Yeah. What's the market expecting? Sorry?
357.
357. Yes. Yeah. Troy is at like close to 380. I want to say. Is that right?
No. Mid 60s. I don't want to be very precise, because at the moment it's the
Mid
he
60s.
hasn't
Okay.
published. Yeah.
Okay. Well, maybe my guess. I think I'm closer to 380 this quarter. I mean, still massive, and I guess quarter 4 is really what I mean. A lot of Tesla bulls are waiting on, because one full quarter of, like, even July had a couple of weeks there with fine tuning happening in Shanghai and projections. So I guess we'll see. By the way, we've passed 22,000 finally on the channel. And Tesla is apparently rallying on the news. 301 sitting on Tesla.
There you go. Like you, 2001, 301.
Thanks for joining me on this stream. So what are your thoughts? I guess going to the second half of this year, I really want to get your thoughts on the second half, because I think first half there was just so many force majeures. There was a million different things going on. Even July a little bit. Today, by the way, news came out. If anyone missed it, I'll kind of highlight it here. Tesla basically telling Giga Berlin, look, we're going to take battery production to the US. And the
Yes.
headlines, of course, on the wire were Tesla pauses battery production in Berlin. But really, the
Yeah.
context is Tesla is saying because of the massive tax credits that we're going to get with battery
Yeah.
production and assembling batteries in America, let's just do it all there. Like it's just so much
Yeah.
worth. It's so well worth it. So that's the context there around it. But what do you look at in terms of forward to in the latter half of this year? Is it deliveries? Is it gross margin? Was it the bottom line? Obviously, what do you care about the most in terms of Tesla projections?
Yeah. I mean, for me, obviously, it's financial results at the end of the year. But I'm a little bit dubious on how they will navigate the deliveries in the next couple of months in the United States with that tax credit. I mean, I'm talking to a lot of people, and about half are saying, "No, I'm delaying. I could have had my Y quicker than I expected. I don't want it now. I want it next year. I want the 7,500 tax credit." So you feel a certain hesitancy in America, and I just want to know, what do they do? Do they ship these cars somewhere else? Do they just wait and deliver them all beginning of January?
Right.
So I really, from a business perspective, I want to see how they navigate these waters, because these are such smart people. I mean, they're always very good. Do they just put incentives in there that don't cost them much but are of great value to the buyers, that they say, finally, fair enough, let's take it? So I'm looking forward to just witnessing what's happening, because this is the first time in a long time that we
Yeah.
have this sharp moment that on January 1st something applies, right? So
Yeah.
we had a couple of anticipation like that, but it never materialized. This is a big one coming. So that's that. And then obviously, how will Shanghai perform? Because
Yeah.
Shanghai is, you just look at this factory and you can't believe it, right? I mean, they seem to be the best built. I have people comparing Shanghai models to the first Berlin models to the American models, and everybody seems to agree that Shanghai quality build is just outstanding. So how can they do it to produce so many so beautifully? What's the difference between the 4 plants now that the other 3 can't get it so perfectly done yet? Is it really
Right.
Chinese know-how? Is it different way of doing, building, whatever? So I really would like to have more insight into that, and just astonished seeing how well they perform.
Shanghai is on a different level. Like
Yeah.
the amount of production, like just productivity, getting the factory up, getting it to ramp, it's world class. I don't think any place ever in the world can ever get to the pace that the
Crazy, right?
Chinese have
Yeah.
in Shanghai. And they've done an awesome job. And to be fair to even the local governments there, they've really bent over backwards to really help Tesla in a lot of these cases, even with force majeures and kind of the
Yeah.
COVID bubble that Tesla had. And so
Yeah.
I think that's why I guess Berlin and Austin, we look at it like, oh, why are these so slow? Like, what's happening? But
True.
the bar is
Yeah.
so high with
Yeah.
with
That's it.
Shanghai.
You're right.
Um,
That's it.
are you on team 500,000 deliveries possible Q4?
Oh yes, I am. I mean, I'm hyper bullish on deliveries. I'm not as hyper bullish on margins as some of the hyper bulls out there, but I really trust them. I have my youngest son being seasonal advisors in the Tesla store here in Santa Barbara every quarter end, and I mean, while he's not talking a lot because he's not allowed to, I obviously see what's happening. It's just crazy. It's just
Yeah.
absolutely crazy. The rhythm they have of pushing these cars out, the demand that is never ending, and it's a beauty to see. But you
Yeah.
know what's not a beauty to see? That nobody dares ask me any questions.
Yeah, no, I guess I want to come on video. I'm not sure if you're on
Oh,
Discord, if you're in
come
the video
on.
game
I'm
on
showing my
Discord,
face. You can
click on
do
the
it.
link. I posted it in our Discord. Feel free. No one's gonna bite. I do have questions written though for you
Go
that
ahead.
people have been asking. I've been starring them ready to go. Actually, we'll get it. Actually, this is perfect timing. So we'll play our Tesla closing price guessing game. I want to play with you. Remember, it's Price is Right rules. You want to guess to the penny of what you think Tesla will close at. You have to be at or under to win. Throw it in the chat. I see people have already gotten the party started. People always get the party started before I even ask because they know I'm late. That's just where we are now. But 301
They
31
manage
sitting on
you
Tesla.
now.
Yeah, they do. So I guess guests go first. What is your guess for the day of what
Today,
Tesla will
3
close
or
at?
220.
3 or 220. I'm gonna
Just
throw
to
in
say
a
something.
303 on the dot.
Oh, gosh.
Yeah. 302, you said, right? 302.
3 or 220, yes.
Okay, there we go. I'll try to remember that.
So what do I
Awesome.
win if I win?
So I usually like throw an orange at you through the camera or something like that. Like,
Oh my gosh.
I'll just send good vibes at you. Yeah. I mean,
Okay, do that.
I think I do have this thing now where if anyone gets it on the dot, like if anyone gets it like perfect, then I'll like get them like a Juju Gang bucket hat or something off of the merch site or something.
Oh, that's so
Um,
cute of you.
yeah. So we'll do something like that, but I don't think you're gonna get it right. I think we're gonna close over 303 here. So I guess
Oh,
we'll
there
see.
we go. We'll go already.
Okay, I got some questions lined up for you though
Go ahead.
from some people. So which one should I start with here? Actually, we'll start with the last one first here from Dan. And by the way, throw in the chat if you have any questions, just label them question and I'll start them. A question from Dan: does Alexandra see 50% margins on Cybertruck once at scale?
Uh, I mean, Cybertruck is a touchy subject for me. I love the car, right? I mean, I don't know why, how a 56-year-old woman in Santa Barbara would love a Cybertruck. Probably nothing is I just love the car. So the first video that got me into Cybertruck was actually the Stephen Mark Ryan very initial one where he explained how simply this will be built. And then I watched Matt discuss it with Farzad recently, and I do believe it's probably the car where they can squeeze the most margin out of it, because first of all, they have obviously optimized their production everywhere now on the Y. And given the materials involved, given the look, it just seems to be possible to push the margins even further. 50%, can you imagine? I mean, a usual car margin is 4%, 5%. The car industry is a really tough industry. They fight each other for each penny. We don't see it here, but getting more margin out of a car is, for the old people, I mean, incredible. And we're talking like, okay, we're at 30, can we get to 50? As if
Right.
it's, nothing. It is enormous. It's never heard of. And then add to that, obviously, all the software revenues that will come sooner or later in en masse. So it's this company is something, I have to say.
Yeah.
And
50%
shout
would
out to
be.
Dan. He's a Canadian. There you
I know.
go.
Yes, I've talked to Dan before. I'm
Oh,
on my
you did
trip to
good.
Yellowknife. He's giving me some advice on where to go
Good.
for my trip. Yeah.
Good. And it's been good to me too.
302 302.40 sitting on Tesla.
Oh,
It seems
here
like
I
Alexander,
go.
your guess is actually looking good so far. We got 8 minutes left here until close.
But you're getting
Now
closer as well.
we've answered some of these around how much effect Moody's and S&P can have on the stock. So I'll just refer people back to probably the more first 15 minutes of the stream, I think. And the Berlin one we've addressed here with the Berlin expansion as well.
Yes.
I'm not sure really where to take this one, but I'll just throw it at you and see if you have any insight here. Do you think Tesla will start a large leasing program?
But I have leasing. I mean, I'm leasing my Teslas. I never
Oh,
had
you?
a question. Yeah,
Yeah.
but both the model. I mean, all four now, because now at least two are left. But we started with the Model 3, 2020 leased, which we gave back early because my son put so many miles on it. That had a nice parental discussion, but didn't help much. And then we had the Y in a lease, which we now changed to the X long range as a lease, and we have
Nice.
renewed his Model 3 into a Model 3 2022, which is actually another thing I want to just point out. It is incredible how these models
Yeah.
improve, not only the software, of course, over the air, but also the hardware. The 2022 Model 3 we have has nothing to do with 2020, which was a great car already, but they improve these cars so constantly. It's beautiful to watch.
I have to say the build quality has gotten much better. My dad
Yeah.
got his Model 3 2020 May, I believe. I think,
Yeah,
yeah,
same
May
with
20.
us. 1st
Oh
of
yeah.
May,
And I will say like the
pretty
build
much.
quality was fine for him. He didn't really care too much,
Yeah.
but the build quality between his model and we ordered it what, like 18 months after him or something like that, substantially different. Like
Oh, yes.
like a lot different. Like even
Yeah,
for
and
him.
that's still nothing. And that's still
Yeah.
nothing compared to China. I had somebody that
Mm,
had the three, a China build, a Berlin build, and a Fremont build, and crazy the difference to the China build. And I mean, it's not as if the other
yeah.
cars are bad, but there is
Yeah.
still a huge margin for improvement.
I was listening to someone on Twitter Spaces from Berlin who got a made in Shanghai, and he said the build quality is like top tier of that
Yeah,
vehicle.
and that's
So
Germans. And we Germans, we're
ex-
difficult on
exactly. Wait,
build quality.
are you German or French or
I
both?
am. I am. I was born in Germany. The first 25 years I lived in Germany.
Oh,
I
nice.
mean,
Okay.
with 1 year in the States as an exchange student when I was 15 and 2 years studying in London. But and then I moved to France because I married a Frenchman.
Ah, got it. Did you know French when you were growing up then?
Not at all. I learned
Oh,
it in bed. I always say I learned it
wow.
in bed,
That's
but I learned
impressive.
it well.
That's impressive. That's impressive.
Yeah.
Okay, the kind of the next one. Will Europe energy crisis affect Berlin? I guess I'll answer this for like
Hey,
yes.
that. Yeah.
Big time. It will. I think this is a bigger than Tesla issue. This is a humanity issue
Mm.
really at play here, and I think it's a little bit myopic for us to even talk about this pertaining to just Giga Berlin because it's such a countrywide or just a continent wide issue really.
Yeah.
But love to get your thoughts on that.
Well, I agree with you that I think this is going to be a tough winter. I do see a little bit of hope. I actually find it quite dubious that suddenly Ukraine is making so much progress. I love it, no doubt about it, but I just wonder what happened all these past months that didn't happen and now it
Hmm.
happens. But good, 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 we're taking it. So if this brings Russia back to the negotiation table and we can get out of this crisis before winter hits, that'll be a real good macroeconomic event that would help the whole stock markets and everything to just calm down, settle, and chill. But I do agree. If we're getting into a tough winter, Europe is still not prepared 100%. They may say what they want, but they have a couple of really weak countries, especially Italy, are having a high focus on watching Italy, who was always dependent on outside energy sources, who lost Libya because they weren't producing anymore, now lost Russia. So they are in a very particular situation and are already a country with high debt, so can't really help with energy subsidies to their people because there's just no money around. And they have elections where we expect a right-wing party to win, which then would like to get out of the euro. So we could have actually an energy crisis combined with a euro crisis, a currency crisis, and that
Hmm.
would not be a nice thing to see.
Hmm.
And Tesla would be a collateral damage. I mean, not damage in
Hmm.
a huge way, but there would be collateral damage for Tesla in Berlin.
Yeah, I think in these cases you just have to look at relative risk, and absolutely there's a
Yeah.
lot of risk, but yeah, you have to look at just relative here.
And that's the moment where I thought, you know what, Berlin is still so insignificant. If really for a couple of months there's nothing coming out of Berlin, will it really change something? And it won't, because the part of Berlin, the contribution of Berlin for the next 6 months is still minor, 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 and Shanghai can pick that up just by ramping a little bit more. So I'm not worried about the Tesla stock as such. I mean, there will be a couple of tough days in terms of headlines, but if you think it through, Berlin is really not contributing that much yet.
Hmm. Lance asks, first of all, he thanks you for your work. He says, "What's the end game for Twitter?" I'm guessing Elon and Twitter here. If you have an idea on what the end game possibly might be for Elon.
I mean, my hope still is he buys it. Given how nasty it gets, maybe it's over already, and I don't want to admit it. If he buys it, I think Twitter will be very beneficial to a lot of things, to society as such, because we just don't have an independent, large marketplace media that has no political assignment. And I really hope that will exist. Look at America at the moment, either it's right wing or left wing, and they're just fighting each other, and each tells only their stories and nothing neutral in the middle that allows people to contribute and just make this whole thing happen and discuss matters. Even if people don't agree, they can discuss them out. So I'm still a big proponent of the Twitter deal. No matter the price in the end, because you know what, Elon will make something greater out of it anyway. Even if he buys it at 54.20, that will sound little in 3 to 5 years when he has transformed it what he wants for it. But if it doesn't happen, I'm actually not unhappy either, because he'll put all that money back into Tesla, right? And that could come at the ideal moment. Can you imagine a credit rating update? Maybe they're doing that bond issuance. We're having good Q3 numbers, and
Oh man.
and he's putting the money back in the stock. That'll be something.
Wow. That's a great point. Yeah, that's such a if you're Tesla short, if you're a Tesla bear and you have an outstanding
Oh,
short
get
position,
out now. Call
the
Bill Gates.
just the risk of
Yeah,
Elon turning around and being like, we've settled this, I've paid my fine, I'm out, I've got all this excess
exactly.
capital. Or him even going ahead buying it at a discount, still having cash left over, like whatever it might be, the risk of that happening, and then Elon coming in and buying Tesla hand over fist
Exactly.
again.
Yeah.
Just like, even though it might be a small percentage, but just having that as an outstanding
And the
non-zero
headline.
event, and that could be
Yeah.
massive, because we've seen what happens
Yeah.
on the downside when Elon wants to sell, right? Like we've seen the
Exactly.
drawdown days. So
Yeah.
So
Exactly.
yeah, imagine that credit. Tesla issues $5 billion worth of bonds, gets a re-rating up, does a buyback program, and then
Yeah.
then Elon
And,
buys
and you know, and Elon would know that. So Elon could time that. Elon could do his buyback much earlier than he announces the whole rest. I mean, it would be just crazy.
Yeah, of course, a little bit wishful thinking on our end, but
Yeah, sure. We can
sometimes you
dream.
gotta dream, right?
Exactly.
Stefan Bedard asks, "Is Alexander excited for AI Day 2, September 30th, unveiling of the bot prototype?"
Well, I'm not sure we'll really see the bot, but if we do, I think that's going to be very interesting. I like the bot idea. I mean, I want to have a bot here doing my chores. I'd love that, folding my laundry and doing all that. If you ever spoken to a mother of 5, you'll know what we're talking about. So I'm excited about it. I do believe domestic use of bot is still far to go, but if they can use them in the factories, that can only help. I mean, every bot will increase our margin. So yes, I am very excited about it.
Yeah, I don't know what to think about it. I talked about this with Farzad yesterday. I was like, I just don't know.
Did you see that you won by 1 penny? Oh my gosh, I can't believe this.
Did I win?
I hate losing.
No,
Yeah,
no.
39 cents to you and 41 cents to me.
Oh, no. I
it
guessed
kills me.
303 on the dot. That's what I guessed.
I know, and I guessed 302.20, so I'm 41 cents away, and
You're
you're only
41 cents away.
39 cents.
I mean, I will say that's a really good guess. We have Curtis Johnson guessing 22 cents. Mimi guessed 22 cents as well. I think Rick. Oh, Alan's over. I guess 69 cents. That one killed him. Rick's at 302.50. That might be our winner for the day. Hold on here. Let me just.
I
make
think
sure.
Gonzalo was right as well. No, wasn't that?
Gonzalo, I'm trying to find. I was telling everyone I need to create some sort of a Google Doc sheet where they can throw it in, because every stream I just spent like 6 minutes trying to find out who the winner is. I guess I need the Tesla bot or a Google Drive
There
sheet.
you go.
One of the two. Actually, Alex Johns guessed 303.53. I wonder if that's our closest, actually.
Oh, and Michael Kennedy was 302.69.
69. So I guess that might be our winner for the day. Yeah, I think it was Alex Johns. Alex,
there you go.
Guessed 303.51 or 302.51. That's our winner for the day. Congrats, Alex. I'll give you some virtual juju later. And yeah, I mean,
you got bragging rights, Alex.
I'm just happy we closed above 300, considering yesterday's CPI move on the downside. It just looked like ugly action.
NASDAQ. Oh yeah, so NASDAQ is.
Yeah, NASDAQ essentially finished flat. It rallied a little bit, but I mean, up 80 basis points on the day. I mean, okay, that's good enough. I mean, Tesla's up 3.5% on the day, so
yeah, that's better.
I also think window dressing is playing into effect here a little bit, and might until the end of the month as funds try to reallocate and sell off their losers. Tesla's performed really well this quarter comparatively. So
completely agree.
An awesome stream. Great vibes with you, Alexandra. And yeah, you're welcome to come on again whenever. Where can people find you? Subscribe to your channel, all that sort of stuff as well, if you wanted to throw that out.
So my Twitter handle is Tesla Boomer Mama, and I'm not changing it. I've had people tell me, "Oh, that's so childish." It's not, and that's it.
I like it.
So there we are, exactly. And so I have a Substack as well. I have a very tiny little YouTube channel that Yashu came on kindly, which was great. So you can it's all under Tesla Boomer Mama, and on Twitter as much as I can. Love doing that.
Yes, you have an awesome Twitter profile, and all your tweets are awesome. Everyone go follow her. Her handle's right there. Go subscribe to her YouTube as well. I do have to thank everyone for 20,000 subscribers. Finally hit it. I thought level 5 FSD was going to come out before 20,000 subscribers hit, to be honest.
No, you made it, Yashi. You made it. Congratulations. And I was there, live there.
Yeah, we were really close. So I appreciate everyone's support, and an awesome discussion as well. If anyone has any comments, if you're watching on replay, feel free to throw your comments down below. I read all of them. If there's anything that we can answer, we'll be happy to. But if not, go on Alexandra's YouTube channel as well, and motivate her to want to put out more content as well. That always helps all of us feel more motivated too. But if not, just catch her on Twitter. Yeah, you're in good hands. Thank you so much, Alexandra, for coming on.
Thank you, Yasha, for having me. Loved it. Thank you.
Take care, everyone.
Bye-bye.
Awesome. That was great.